Hey folks, Ajay Vikram here. In this video, I will explain about money market. Before going that, I will say a quote. The most important investment you can make is in yourself by said by Warren Buffett. In previous video, I have explained about I have explained about the cash equities in a previous group of videos. If you didn't see that, just come from the very first video because it will be so useful if you are coming from for very first video. So that you can understand the concept so clearly and wisely. And in this video I will explain about money market and types of money market, and I will give the introduction about my money market. Actually, money market, we already saw about capital market. Capital market is useful for the long term purpose. If the company is raising a capital, they will go for longer time. They will choose money capital market. And if the company is raising a capital for very short term, that they will choose money market. Money market is useful for short term purpose. See, money market is basically providing a borrowing and lending facilities within a short period of time, which is upon 365 days. And money market is an investment of money market or maximum tenor up to 365 days. And the investment of on the money market offers safety to investors within a wide range of maturities within a period of 1 year. And there are major players. Who are the major players in money market? The individual that like retail investors won't indulge with money market. These are the following circumstances. These are the following things who are all coming in the money market players: commercial banks, retail banks, investment banks, governments, corporate, DII, which is domestic institutional investors, and foreign institutional investors. And for your knowledge, I will explain about CRR and SLR. I already explained in one of my video, and I will explain it again. CRR means cash reserve ratio. Cash reserve ratio is, I already told you, the partial that the cash reserve ratio is the we are depositing in bank. Will the bank lend entire deposits to public and they will get interest? No, definitely not. They will share the portion of the amount. There's a percentage. The percentage are share the percent of the amount to RBI that are mandated by RBI to share those from total deposit. They are sharing percentage of amount to RBI for payment obligations in futures. In cash reserve ratio in India is 4.5% current cash reserve ratio, and statutory liquid ratio. This is maintained by bank themselves. Like cash reserve ratio, statutory liquid ratio is a minimum percentage of deposit that the bank should have in the form of liquid asset, liquid cash, securities, or gold. The bank do not give to RBI or reserve to RBI, but the bank held separately by the bank themselves. This is the difference between cash reserve and statutory liquid ratio, and the current statutory liquid ratio in India is 18%. I will explain about the types of money market. Call money, repo, repurchase agreement, certification of deposit, commercial paper, treasury bill. These are the 5 things in money market. These are 5 types of money market. These 5 types are useful to lend and borrow money for only 1 year or less than that. It is a short term. Their money using for lending and borrowing money. In this video, I will explain about the call money market, which is one of the type of money market. Call money market is a non-collateral lending or borrowing facilities within a bank. See, if I am borrowing loans to bank, the bank has to ask me to submit the collateral for some uncertainties. If I am default to repay the money to bank, the bank convert that collateral into the liquid cash for this purpose. But here in call money, there is no collateral for needed to lend or borrow money. See, actually these call money is only useful for banks, scheduled commercial banks, and primary dealers. Primary dealers are institutional investors, domestic institutional investors, government, and investment banking. These are the primary dealers. This is only open for them. not for any other investors like public. This is only for banks and some other primary dealers. And this is a this call money market. Every commercial bank in India borrow money for the for a sudden shortfall for the particular day in following circumstances, like to meet the requirements, or there already I told you about CRR and SLR. There is a mandated by, that is mandated by RBI, so they should meet the requirements. For that purpose they are using. If the bank, or else if the bank having a surplus money, what will they do? Just they will lend that money to, or giving that money to other banks, and they were earning profit in the form of in the form of interest. So for that purpose they were using call money. And how they are doing dealing with call money is in the form in the electronic trading form, in the electronic trading platform, which is called as NDS, negotiated dealing NDS, negotiated dealing system. This is a platform. And if there is any lending and borrowing transactions or arise, that is the banks are required to instantly inform to RBI through NDS, this negotiated dealing system. And there in call money there are 6 types. One is intraday money, which is if the bank is borrowing money from another bank, they should repay to the money within 2:30 p.m. afternoon. This is intraday money. And call money, this is lending and return it by one day. This is call money. Overnight money, this is to borrow today, return tomorrow. This is overnight. And term money is 14 to 365 days they were using. This is term money. And notice money, this is 1 to 14 days they were repaid to the money within 1 to 14 days. And term money means 14 to 365 days they should return. This is term money. And weekend money, borrow on Friday and return on Monday. This is a weekend money. If you understand these concepts, just do like a video and share it to your friends who are all needed, and smash a subscribe button. This is Ajay Vikram. Bye.